Are you looking to pay off your mortgage quicker? Here are 3 things you can do right now to cut 5 years off your mortgage. So one of the most frustrating things about being in the finance space is how people often take the most complicated advice as being the best advice. They often avoid the most simple advice because if it's simple, they believe that it's not worth their energy and time. But if it's complicated, they believe that, hey, that must be the right solution because it's overly complicated. And to me, that's what happens with paying off your mortgage faster. People are looking for solutions that seem overly complicated because if it's complicated, then they can justify why they haven't been able to take the steps to pay down their mortgage quicker. Or else if they just look at simple strategies that it's like, oh, everyone can do this, it's like, oh, that can't be possible because if I can do that, then I have to then look at why I'm not doing that. So I think that's why people look for complex solutions when it comes to paying off your mortgage faster, rather than just following like simple basic things that can help you pay off your mortgage quicker. Hey guys, welcome back to another video. If you're new to the channel, welcome. My name is Brighton. I'm the author of the book, Master Your Mortgage, What the Bank Will Not Tell You About Buying the Right Home. On this channel, I explore financial topics to try to teach you how to put your money to work rather than working for your money. If that's something that interests you, make sure you like this video and also make sure you subscribe to the channel if you're not already subscribing. So in Canada, mortgage interest is not calculated in advance and it's calculated semi-annually. So what that basically means is that the principal amount that you have in your mortgage, if you can reduce that principal amount at the time when they actually calculate your interest, you're actually going to be able to save on interest costs down the road. So it's really important when you have a mortgage in Canada, you want to find ways to make more frequent payments, and then you want to find ways on how to actually make extra payment. There's no way around it. You can figure different strategies on how you want to do it, but those are really the 2 things you need to do to be able to bring down your mortgage quickly. You need to find ways to actually make more frequent payments, and then you need to find ways to actually make additional payment over your monthly amount. So the first thing that you want to avoid if you're trying to pay off your mortgage quicker is don't pick your mortgage payment out of convenience. And what I mean by that, if you're paid bi-weekly or monthly, don't pick the corresponding mortgage payment that matches up with your paycheck. Doing that is going to mean that you're going to pay more interest over time. There's only 2 options that you need to consider if you're trying to pay off your mortgage quicker, and the 2 options are accelerated bi-weekly or accelerated weekly payments. These 2 payments will ensure that you make more frequent payment, which again is important in terms of how mortgages work in Canada, right? You want to be able to make more frequent payment. So having an accelerated bi-weekly payment will allow you to do that, and that's really important because that's going to bring down that principal amount. So when the interest is calculated, it's going to be a lower principal amount, which is then going to save you interest costs. The other payments that you have that are not accelerated or weekly or bi-weekly, you need to know that those are payment out of convenience, and they're basically designed to match up with your convenience for your paycheck, but they actually don't do anything to actually pay down your mortgage quicker. So let me explain why bi-weekly payment is different from an accelerated bi-weekly payment. So with a bi-weekly payment, all you're doing is basically taking the monthly equivalent payments that you have to make in a year and you're dividing that up into 26 equal payments over the course of a year. So you're not making extra payment, you're just making the exact same payment you would on a monthly schedule. The only difference is now you get to make that payment over a 26 period. With an accelerated bi-weekly payment, what we do is we take the monthly amount and we divide that in 2, and then we make 26 equal payments throughout the year. So by doing so, we actually make extra payments in addition to paying those payments frequently rather than the bi-weekly schedule. So if you really want to pay off your mortgage quicker, you have to pick the accelerated option because that means you're going to make extra payment as opposed to just picking the bi-weekly payment. So those are the 2 differences between those 2 payments, and a lot of times people think they're doing the right thing because on a bi-weekly payment option, when in reality they need to go to an accelerated bi-weekly payment to try to make sure they make that extra payment over the course of the year. The next thing you can do to try to pay off your mortgage faster is actually reduce the amount of amortization that you select. So by default, if you have an insured mortgage, you're going to be looking at 25 years, or if you have a conventional mortgage, then you can go up to 30 years, but you can actually reduce your amortization. So for example, rather than sign up with just a default 25 years, you could then default it to 20 years. And by doing it 20 years, that means that your mortgage is actually going to be paid off in 20 years. Now, doing a reduced amortization also means that your payment's going to go up. So this one is possible, but it's probably a stretch for most people because most people already have a high mortgage payment, and trying to reduce the amortization means they're going to have an even higher mortgage payment, especially in a time like this when we're dealing with high inflation and interest rates are really high. That's going to be a very hard thing to do, but it's one thing to keep in mind that you can do to actually pay off your mortgage faster, which is basically forcing the timeline that you would like to have your mortgage paid off in. So if you want it to be paid off in 20 years, you effectively basically then set it up so you're gonna have to pay it off in 20 years by reducing the amortization from 25 years to 20 years. And the last thing that contributes to people not being able to pay off their mortgage quicker is that they constantly refinance their mortgage. And it's really important that you stop refinancing your mortgage, or at least stop refinancing your mortgage frequently. So let me explain what refinancing basically does. When you have a property and you have a gain in your property, which means your equity's gone up, you need to think of that like as your retained earning that companies have. So companies, when they make an income, they have expenses they have to pay out. By the end of it all, they'll have like a final number, their net income, and they can retain some of that net income in their company, right? Which is called retained earnings. They keep that in the company, and that's basically their company's savings account. So they can use that to either, buy other businesses or do different things to try to generate a higher cash flow for the business. Your retained earning is like your equity appreciation in your property. So when you constantly refinance your property, which is basically you taking that retained earning and then giving it back to the bank, and then they charge you a higher interest rate, which means they get to make more interest in that back end, you don't want to do that. So if you're doing the first two options I've given you, you want to avoid frequent refinance. And you especially want to avoid frequent refinancing when it comes to debt consolidation, which basically means that you're taking equity that you've worked hard to pay down your mortgage and build that equity, and now you're basically giving it back to your bank, and you're doing it on an asset that's not going to appreciate, which is your debt, right? You're just paying off your debt. And then on top of that, they're going to charge you more interest on top of it. So you want to really avoid frequent refinancing if you're really trying to pay down your mortgage, because it doesn't do you any good. The only time you should really consider refinancing is if when you're in a position where, let's say, your interest rate is like 5%, and then you can get a lower interest rate, say at 2%, because that's going to help you again reduce the mortgage payment, and then you're going to be able to pay off your mortgage faster. But other than that, you need to stop frequently refinancing, because frequent refinances actually hurt your ability to pay off your mortgage faster. So let's put these tips into an actual example to see what the difference would be in terms of how much quicker you're going to be able to pay off the mortgage if you apply these tips that I've mentioned. So let's assume that you have a mortgage for $500,000, and then let's assume the interest rate is 5% and amortization is over 25 years. With an accelerated bi-weekly payment, the payment's going to work out to be just over $1,400 bi-weekly. By choosing that payment option, you're going to end up saving $60,000 more in interest costs compared to choosing a monthly payment plan. By also going with an accelerated bi-weekly payment, you're also going to have the mortgage paid off 3 years earlier at 22 years as opposed to 25 years if you're chosen a monthly payment plan. And if you want to pay off the mortgage 5 years earlier, all you have to do is add an extra $65 on top of your bi-weekly payments, and this will bring the mortgage down to 20 years, which means by the end of 20 years, you're going to have your mortgage paid off. And again, you're going to save more money on interest costs because you're not having to pay that extra 5 years. Now, if you keep the accelerated bi-weekly payment while also maintaining the extra $65 on top of your regular bi-weekly payment, and you also reduce the amortization down to 20 years, you actually end up paying your mortgage off quicker at 17 years. So you really get rid of that mortgage pretty quickly if you can do all those three things in combination. But remember, the most important thing that you have to avoid doing is adding new debt, which means you have to stop frequently refinancing, unless, like I said, you're able to save on the interest costs where you can actually reduce the amount of interest you're going to have to pay over the term of your mortgage. But other than that, you really want to keep that retained earning in your mortgage or in your home and ensure that you're not pulling it out to just buy for, a new boat or whatever else that you want to. That just adds more debt onto the mortgage, and it means that you're not going to be able to pay that off quicker. So that's it for this video. I hope you guys found this video informative and helpful, and if you did, do me a huge favor, make sure you hit the like button. Also, make sure you subscribe to the channel if you're not already subscribing, and as always, I'll catch you guys on the next one. Take care.